Hi friends, let's talk about something that is probably burning in each of your minds, which is, will the stock market ever go down? The answer is yes, but the real question is when and for what reason, right? So let's consider a couple of things. At the beginning of the year, for those of you that are our clients, you know, January 2nd, I believe, we came out with a video, and you can check our library on our website. We came out with a video that said we believed two things would be true of 2020. Number one, that the S&P 500 would get to 3650. Number two, that this would be the single most volatile year in over a decade. Now, it appears we may be right on both of those, but for very different reasons. We had no idea the volatility would come from this thing called the coronavirus, but here we are. However, we knew that economically it made sense that the market would support the 3650 valuation. We are within less than 5% of that, even after all we've been through. If I would have told you in January, hey, listen, we're going to hit all-time highs in February. That same month, we're going to have only the third presidential impeachment ever. We're also going to deal with this thing called the coronavirus that shuts down the global economy for 9 months for the first time ever. We're going to have corporate America literally shut down. Profits drop by 25 to 35%. The government debt literally go up by 35% in 3 months from 20 trillion to 28 trillion. And oh, by the way, we're going to have civil and social unrest that we haven't seen in nearly half a century in this country. And there's going to be a general election. After sweating and maybe even taking a drink of a cocktail, you'd take a deep breath. And then I'd tell you, oh, by the way, we're going to be on pace to hit our double-digit market return goals for the year. It'd be unbelievable. We addressed this in a previous video. The one thing that drives the market higher, not in the short term, but over time, is earnings. The belief in future earnings as well as present day earnings. And here's what's happened. The federal government and state and local governments effectively decided who would stay in business and who wouldn't. They told the local restaurant, you can't stay open. But then they told national chains, you can. The local hardware store, you can't stay open. But Home Depot and Lowe's, you can. And guess what? Those companies make up the publicly traded markets, and their pockets are fat, and their earnings, in large part, now there are a number of sectors that are not doing well, but in large part, these companies are making money, and at record paces. In fact, our belief is, no matter what happens in November, that 2021 will be the single strongest year in corporate profit history in the country. And we maintain that the market is not overvalued. The market is not at some sugar high, that earnings is supporting where the market is. And we said at the beginning of the year, prior to any of this happened, we thought we'd be at 3650 and 32,500 on the Dow. We had to adjust that down because we were in a pandemic and chaotic environment, but we now still believe that the market will finish at 32,500 on the Dow and 3650 on the S&P. Now, a question I had most recently, where is the market overvalued? And from our models that we follow and that we use, we don't believe the market is overvalued until we get to above 4,000 on the Dow, which is to say, we've got a lot of room to run. Now, as you know, we're holding a lot of cash, and that's on purpose because valuation and volatility are not mutually exclusive. They can have causation and correlation, but while we do believe volatility will spike as we get closer to November 3rd, we still maintain the market is on its way to all-time highs, and that is supported by data, not opinion. Thanks for watching. See you next time.